Hello traders, it's 8 a.m. Chicago time on Wednesday, the 26th of July, 2023. It is FOMC decision day, FOMC decision day, very important day today. Um, Again, this is episode number 2510. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we go with the convergent trading pre-market summary sheet today. Again, FOMC day, very important day. The market overall is mild risk off, weighed heavily down by the European markets. European markets taking a bit of a beating this morning. Several reports, I believe Deutsche Bank came across and several others, but let me find it actually. Where are you, Deutsche Bank? GlaxoSmithKline came out. I think pretty much everybody beat. Deutsche Bank shows revenue of 7.4 billion versus 7.06 expected. I don't see the EPS here, but again, pretty heavily weighted there. You can see the DAX is down 1.19%. The Euro Stoxx 50 down 1.72%. Overall, just a drag this morning. Continued focus on earnings, mild risk off this morning. We had quite a few early today. We had AT&T, which beat by 5%, 63 cents versus 6 cents. We had Boeing, which came in better than worse. Came in at 82 cents and a loss per share. Can you imagine a company as mature as Boeing still negative on EPS? Down 82 cents versus 84 cents expected, so it beat slightly on negative earnings. Coca-Cola 78 cents versus 65. General Dynamics $2.70 versus $2.56. We did get GlaxoSmithKline 97 versus 87. Deutsche Bank 25 cents versus 66 cents, missing by a whopping 62% on Deutsche Bank. Pretty bad, and that's where much of what you see in the European market kind of is that's what we're seeing. Again, there are many others. I'm not going to go through them. There are many places online to see what earnings, what has happened with earnings. After the close, we do get Meta today. Meta is expected to report $2.91 on 31.12 billion. Meta, which is formerly known as Facebook. And then we get Molina Health and several others, Flex, other companies like that. Again, check that out online. We're not going to go through the earnings. We're just going through the highlights. Australian inflation lower than expected. That came out pretty good. Strong Alphabet earnings report. Microsoft earnings beat tempered by slowdown in growth for cloud services and expectation that growth from AI services will be gradual. Microsoft announces that it's what's it called? Azure AI, Azure Open AI. That's what it's called. Azure. I don't know. That word is, I know it in French, Azure, which means blue. Azure Open AI service with over 11,000 organizations writing to that Open AI service. This generative AI is incredibly pervasive now. It is being integrated everywhere. This is the future. Today, we get new home sales at 10 o'clock. We've got crude oil inventories coming out at 10:30. Crude oil inventories, we're looking for a draw of 2.348 million. In gasoline inventories, we're looking for a draw of 1.678 million. The new home sales number for June, we're looking for 725,000 units, and the expectation for new home sales month on month is -4%, -4%. And then the Fed, speaking of the Fed, we have to go to our favorite tool here, which is the CME Group's Fed Watch tool, which basically converts the positions on Fed fund futures to basically a percentage or a probability for the Fed doing something. Looks like CME's website is slow. Here it is. 98.9%. Everybody's got access to this tool, by the way, offered by QuickStrike. But you could see that for today, there's an 98.9% probability that they would hike 25 basis points today. Is there a problem with the audio? I guess not. No, there isn't. 98.9% probability. So you could see that it's pretty much baked in. So anything that deviates from this, from a 25 basis point hike, bringing the target rate to 525 to 550 basis points today. Anything that deviates from that is going to be dramatic today. The FOMC rate decision comes out at 2 o'clock, the press conference at 2:30, and of course, given that the market has already baked this in, it's really, really important what and how our friend Jerome Powell, guides into the future. Okay, so very, very likely to cause a repricing. The problem with a 98.9% probability is the stuff is already baked in, so we may not see that much movement. But again, it is about the presser. It's about what the committee sees the future to look like that is likely to cause repricing. So I'm not paying so much attention to the 2 o'clock release because again, it's baked in with certainty here into the current prices. But it's the press conference at 2:30 that is likely to move us around. So as you're trading, pay attention to the fact that we have the presser coming. Looking at the S&P, we have a multi-distribution profile. The market has put in a double distribution, really. 160,000 contracts traded. The inventory is 37% short, nothing too dramatic, but the range is pretty good at 22.75 points. Point of control shifting to 45.93 and holding steady here at the high end of the range. Let's take a look at what was expected yesterday. Here's yesterday's expectation. I'm showing you the NASDAQ here real quick. The NASDAQ had a pretty excellent, so you could see here in the text that I said if the NQ takes out the high, we're likely to push to 719 very quickly. And that's the main trade yesterday in the NQ. If we look at what took place, we'll see that, you know, as we push through the 619, we opened right down here in the 588-ish area, 89. We had a very small touch lower, but we could see that there was some driving behavior right off the open. I don't mind driving behavior. I expect the market to find a top and rotate down. If it does not, it indicates that it's likely to be an open drive, and we know not to fade that or to sell an open drive. But what was important yesterday is the NASDAQ had one time framing down, which would be broken at 619. It broke the 619 and went right into what was expected, which was our target as outlined here at 719. That was the key trade of yesterday. Now, knowing the key trade and trading it are entirely different things, because the market tends to not move in a linear fashion. But you can see the 719 right up here is right near where it topped out yesterday. So it's we ended up tagging it, pushing through by a little bit. Here's what the NQ looked like on an intraday basis. Let's close the book. There it is. It ended up pushing right into the 736 or so, 736 and a quarter. We ended up taking out the 736 and a quarter with the Google and Microsoft news right up here, and then from there, we just from the open, we just absolutely sold off, and the market is looking pretty weak this morning. So we're trading. We have a selling tail in the overnight session. Here's the selling tail right here. You can see that the market moved down with very little volume. You see there's very little volume right there. This is a selling tail, and then it finally found a base, ended up rotating up, confirming the mid right here, this dashed line, confirming the mid, and then holding steady. So what we have is a B-shaped profile for the overnight session. This is a long liquidation. Long liquidation into the lows here. The S&P has actually a pretty weak low this morning. Well, it did. It just broke it just as we started here, but it had a double bottom at the low. You could see there was quite a battle here, and then as soon as that was taken out, you could see that there's support. I expect that pushing into this 84 area, I expect that there's likely to be a continuous battle here on the open. You can see that they're hitting the bid, and the bid is trading out, so you're getting a lot of collisions. The only reason these red dots show up is if there's a collision. There has to be a collision in order for that to show up. And you can see that there are bids all the way down every 4 ticks or so. You can see there's a bid right there. 4 ticks, 4 ticks, 4 ticks, 4 ticks, 4 ticks. As we push down, these are actually trading out. So if you had watched the move lower in the S&P, you would have seen that these are where the collisions take place. See that print right there, 400 or so. Before it moves into the next price, it has to work through those bids. There they are reloading again. You can see the bid reloading again. This is potential support coming in. It may squeeze a little bit because we're opening right near lows and it's a weak low, but they're attempting to support this, and again, they're working an order, a bid every 4 ticks coming into the S&P. So be cautious with that. It doesn't mean that you don't follow your plan and get short if that's what the setup calls for. Just be aware that it's got to chew through a lot in order to put it through. So this is something to kind of pay attention to. Amazon came out. There was news today that I posted. For those of you who are in Convergence chat room, I posted this morning this news flash that came across. The FTC is finalizing a long-awaited antitrust lawsuit against Amazon, which could ultimately break up parts of the company, according to Politico, citing sources with knowledge of the matter. This came across CT's news service this morning, and I posted it in the Maven's channel to let you know that this is quite negative for that stock to break it up. This is something that's kind of hanging over us a little bit. So in any case, that's where we stand this morning. The S&P quite weak. The line in the sand in the S&P is around the point of control at 46, 45, 90-ish. This is where the market has to take back this zipper right here, along with this low from yesterday, in order for us to squeeze higher. So as we drag the VWAP down when we open, when a lot of volume comes in, this VWAP is going to slide down quite rapidly. It needs to squeeze through and push up above this 90-91 area for the market to have some follow through to the upside. Brings us back to the settlement price of 96 or so as a first test, and then the 4600. The S&P left behind a double top, basically missed by 2 ticks. You could see that last time we were up here, we went to 46.09 and a quarter. Yesterday, we went to 46.0875. We missed this by 2 ticks. What we have is a double top in the S&P, and we are at the low end of the range. What's important on the S&P front is that we broke through. We went below the 92. Does the 92 sound familiar? Didn't I just mention the 91.92 area as the LIS for the overnight session? Well, the 91.92 area is the LIS for the day session as well. This is where we have single prints from yesterday, and this is where the upper distribution, where value was yesterday, is separated from the lower distribution where value started. So we started down here, we started at the open down here, we generated value right up against this prior high, and then we squeezed through and ended up moving value to the upper end of the range, and now we're in the lower distribution. So this is a very important and very clear structure that we can trade against, in that the 91.92 area on the overnight front, as well as the closing range trade, as well as the full structure of the day, the 91.92 area is the line in the sand today. Very important to watch that. You want to see how it prints above the 91.92, and if it holds, then it's very likely to run to 96, but more importantly, run into the point of control, which is 45.99, and I believe in volume the point of control was 45.95.75, which is right up against, well, hang on, is settlement correct here? 45.96, correct? Yeah, so the point of control looks like 45.99. Looks like a point of control. Depends on your data feed, but it could be the 45.95.75 or 45.99. In either case, we push through the 91.92, and that's where we're headed, most likely. Okay, so just remember that. In the NASDAQ, we're at the low end of the range. This is really important right in here, this 619 area. The NQ is trading at 626 currently. The 619 is back in play, if you recall from yesterday. And yeah, the VPOC I have, it's kind of interesting because IRT is showing it. I'm going to reload the current session. It just shows it lower. So odd. With Rhythmic, it's 99.75, and with IRT it shows up at 95.50. So in either case, it's right in there against the prior settle. So here's the NASDAQ. As long as the NASDAQ holds the 619 here on a retest, I'm expecting that it would likely squeeze higher back into this 73, the 73 settle, which is settlement for everybody, and then from there we're looking for it to push into the point of control here at 690. So that would be the key here, 619. I'm going to be watching that very carefully this morning. It's less than a rotation away. It's only 8 points. And I'm expecting that if it taps on that and holds it, even if it pokes through, it comes back in and holds it, then I'm looking for a long to push back into this 73 and then the point of control above it. Okay, so that's the key play. If the NASDAQ opens up, goes sideways, it's at the bottom of the range, squeezes through the 619 and is unable to get back above and starts moving lower, then we are likely to have a breakout. And if a breakout takes place, then we are retesting the low of the prior session, and we're likely to go into balance into the Fed, the FOMC announcement. And in this case, we're looking for 557-ish or so to the downside from 619. That would be the next trade. The NASDAQ stop for this sort of trade is around 12 to 14 points, and we're looking for a whole lot more than that. We're looking for 4 hour or so at a minimum with scale outs in the NQ. This is why I'm focused more on the NQ right now than the ES, because the risk factor in the NQ is actually much better than the ES is, in my opinion. This is what I'm currently seeing. It's thick enough now that you could trade it without the craziness, and the with the collapse of rotations, the NQ is a little bit more under control than it used to be, in my opinion. So that's what we're looking for. So those are the key ideas for the day. Did I lose anybody? We've done some interesting things in that we broke to the upside, and here we find ourselves right back at the 619. This creates an interesting structure, and again, in the ES we have a very similar thing in that we have a double top, which we would consider to be a weak high, yet we find ourselves underneath the 91.92 at the low end of the range, at the tail of the buying tail of yesterday. So I want to see, does it slip through it today, or does it break the overnight low in the ES, which is currently at 84? Does it break the overnight low and then find a bid to target the 91, which gives us a nice rotation from about 83, 82 or so back to 91 to retest the divider in between these distributions. Those are the two key pieces to play with today. Looking at crude, it's just, yesterday it continued higher. It ended up closing at the upper end of the range, settling at the upper end of the range. The settlement for crude is at 130 East Central, 130 Central, and so I'm not looking at the close of the session. I'm looking at settlement. I'm always looking at settlement. The close is the close, but the settlement is what everybody sees, and it's what's the basis by which money moves from one account to the other through your clearing firm. And yesterday we finished pretty strong on another trend type day, multi-distribution trend day, and we are at the low end of the range with this low volume node holding the current move up. So 78.90 or so this morning is holding prices up. 78.90 is the line in the sand this morning, and it pushed to 79 this morning. So as long as it stays below, the low is vulnerable in the in crude, and it's likely to take out this 832 and make its way very quickly. Remember, crude has this clear ledge at 77.10 really. Any move lower is likely to target the 77.10. There's very little volume here, very poor structure from the last couple of sessions. We start to come into a better foundation at 77.10, and that's the area we expect to get tested. Okay, good luck everyone, and I'll catch you tomorrow morning. Take care.